Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here. Hope you're doing well. I am going to be walking you through the S&P 500 and also some of the gold and silver indexes as well too. What's been happening on the short term as well by looking at the indexes there. So if you haven't done so, go to the very first link in the description. I'm running a free training today. It's a live training, and on that training I'm going to be walking you through my #1 trading strategy. And if you are struggling with your trading right now, if you find like, man, I'm trying all these different things, I'm doing the live trading rooms, I'm trying the subscriptions, I'm doing this, I'm doing that, but I just seem to be struggling, if that's for you, you must attend this class. So click on the very first link in the description below, go register for it, and I look forward to seeing you on that training. I'm going to walk you through why my first 2 years, I was $250,000 in debt, and what got me out of it, and why I went down the same path most people do. And I was very fortunate coaching, and how just one simple plan got me out to doing where I am right now, doing really, really well, and having the best year ever. Now, moving on to the S&P 500, guys. One thing that I can see here, I actually notice, if I bring up, say, the last, say, 1 year, notice how we're actually in it. We're actually in a bit of a channel here. Now, where I got this channel was this, okay? If I see how if we start from the bottom, we've got June, we've got all this support through here, all this support level through here. If I just create a parallel trend line, the exact same parallel trend line, and I'm just going to connect the support levels through there. Notice that. Look where we are right now. Okay, it's really interesting, isn't it? We have this resistance through here, support through here, all the resistance through here, and all the resistance all through here as well too. So it's really interesting to see that we actually went from the channel to the channel. Same for the Dow Jones, right? Look at this here. Same thing, right? Channel. This was the channel here, and then projected up, and then guess what you have? And then you have this resistance, this support through here, resistance, and then the resistance through there, right? So as you can see, that's what's actually going on right now through there. And same with the Nasdaq as well too, right? We're at that top of the channel. Let me delete that, right? We're at the top of the channel now. I did this little bit through here is I did skip that. The reason why I skipped that because it was only a little bit. So this point through here, it was only a little bit through there. But as you can see, we had support. We had all the support level through here. We actually support level 3. It actually even found resistance, and then it came back to found support. So that's a very valid trend line. Creating the parallel trend line, found support. Look at all the resistance through there, all the resistance, and look where it found a resistance right now. So it's really interesting. We came back into the channel, and then we ran back up to the channel through here. To me, I just find that absolutely fascinating. I've been doing this for 15 years right now, and my #1 thing is reading the charts, right? Because there's so much power in reading the charts, but it's just fascinating, right? Like how a thing with humans buying and selling, with machines buying and selling, and algorithms can know that there's a trend line through there. It's absolutely fascinating. Now let's move on to some of the gold and silver indexes here. What we can see through here on a short-term basis is we can see that this market is still hovering around this trend line 3. You can see how this trend line is coming all the way down, and we're definitely getting a lot of resistance, and also resistance through here, right? So we're getting a lot of resistance through there, and that's what we can see through there, right? And we're finding a lot of support through here. So I wouldn't be too surprised. Now, if we do start to break up and out of this level through here, and we start to break up and we start to do this, and especially when we start to get back above 28, that's probably likely to tell us that we're likely to see some more upside to come out of this here, because we're basing out through here. We're not making, this is a low and then this is a high, right? So we're sort of just no one in control. But if we start to break up and out, then it'd be really interesting to see. No, if we start to break up and out, that could be the start of the next move to the upside. Let's go to the GDXJ right now. And on the GDXJ is actually different, right? Because look at this here, right? The GDXJ is actually already started to break to the upside. And if I just draw my trend line from here to here, people say, oh yeah, I can't believe you draw trend lines, blah, blah, blah. It's like, isn't it interesting? Some people have this thing that charts mean nothing in this manipulated world. Well, even if it's manipulated, what does this? High, lower high, so on and so forth. And even if the market is manipulated, there are patterns that produce a win-loss ratio, and that's how you trade the markets, right? whether the market's manipulated or not. That's what happens. So high, lower, high, lower, high. We started squeezing up through. Look at this here. And then we broke out. Look at it here. Found support, found support, found support. And now we're starting to break back up. And now we're just doing this here. So we're starting to break up out of this level. But no real oomph behind it, right? Really no oomph behind it. Let's go look at the SIL. So the silver miners index ETF. And as you can see, right, resistance. Found resistance through there. Broke back up. Came back down. Found support level through there. And now we're just going sideways through here as well too. And also looking at the SILJ, that's actually different, right? The silver is actually still in its triangle pattern. We've still got this resistance level coming down through here. We've still got this major level of, I would say, pretty strong level of support level through there. You can see how it popped back down, came back up, and now it's finding a bit of support level through, and now we're trending back up. So once we just start to break up and out of this, then I would definitely, it definitely looks like the market is now starting to, we're building a bit of base here. So the silver and gold stocks is building a bit of a base here. So when we do start to break up, we're probably likely to start to see a move to the upside. So there's a quick little update, guys, for the silver and gold market. That's what I'm seeing there right now, and that's what I'm looking at there right now. But just make sure, guys, that when you are trading, that there's literally hundreds and hundreds of stocks out there, thousands of stocks out there that you can trade. And it can be tempting to trade Facebook, Google, all that sort of stuff, right? To do a lot of trading. So just make sure you rein it back a little bit. Make sure you're just looking for some sort of setup that you're looking for, and then make sure you have good risk management and know that if this one trade, right? Like for example, I had a couple of losing trades today, but they were very small losing trades, right? They were talking about like 20% and 30% of my position. Now, what does that equate to? That equates to roughly around 3% loss on my account. See what I'm saying there? Now, I'm in a trade right now also that is close to 100% return. See what I'm saying there? So that means, what I mean by that is that these couple of losses that I had took my account down by 3%, but in all realization, the trade that I'm still in right now is up close to 100% return, which means I'm still up what? I'm still up, my account's still up about 2.5%, 3% return. See how that works, right? And then obviously I've got a couple other trades going on as well too. So just make sure you're protecting yourself there, guys. Try not to go for the home runs, because every time I've tried to go for a home run, and leave a comment below if this is you. Every time I try to go for a home run, I might buy a risky option, or I might load too much on one option. Most of the time, I end up going backwards. If I trade with good risk management, and I don't get too greedy, I hop in the trade and I let the trade run on for a while, then I get out, and I do that repeatedly. And then as long as I do that and then keep my losses short, my account just grows and grows and grows. Where my account doesn't grow is I screw up by trading either one, too much, because I'm trying to make too much money too quickly, loading up basically, and secondly, by either, because I trade a lot of options, right? So either trading very risky options. Now, what is a risky option? A risky option is really out of the money option, right? Out of the money options can be fantastic for the profit, but very damaging to your loss, right? So an out of the money option can give you 100% plus return, maybe 200% return on that. But then the losses can be 40, 50, 60%, right? See how the loss is not really good there. But if you trade in the money options, the losses, a decent loss would be 20, say maybe 30%, maybe a bit more. And then the profits can be 80%, 100% and more in a couple of days time frame. If you get into a trade and it moves for you in a couple of days, that option can go to 100%, 70, 80%, 100% or more in a very, very, very short period of time frame. Makes sense? So when I'm trading options, I always like to make sure I'm trading in the money options, and I've got at least 30 days to run. So that's the reason why I do it. And then within that, I know that if I have a loss, I'm protecting my capital as well too. So protect your capital all the time, guys. And I'm using that as an example of my couple of losing trades these days. One, I traded with good risk management. And two, I got out when I should have got out, and it was only very small losses. And it's like, okay, that didn't hurt my account at all. Thank you for doing that. And then obviously the trade I'm in right now is still making profit, and then, just keep going and going and going up from there. And that's the way you should approach your trading, right? You get into a trade, you might have a loss, you might have another loss. Oh, and then you have a profit, like boom, that one profit just took just made more, just made twice as much as all those losses on that losing trade, you know, and then take the next trade. Oh, there's a small profit that gave me a 40 or 50% profit. Oh, the next trade, oh, look, that gave me 130% profit. Oh, look, I just had a loss. There's a 30% loss. See how that works? That's how trading works overall. And as long as you keep having that approach overall and you're taking very similar setups all the time, you're going to be doing well long term. Before you go, I am giving away a free trial to the Master Trader Lab with all the different trading courses you can see on the screen right now. So go to mastertraderlab.com right now. I'm running a special over the next few days. So go to mastertraderlab.com to get a free trial to all the different trading courses you can see on the screen right now. So go to mastertraderlab.com.